What's going on, traders? Welcome back to another video. So today we're going to talk about the stock GEVO. I'm sure a lot of you have questions, especially if you're newer to trading. You're probably thinking, what in the hell happened with the stock GEVO today? It was the massive runner. It was the penny stock to trade today. Everyone was talking about it. I'm sure a bunch of people made money. But more importantly, rather than the money people made on it, we need to talk about what actually happened, right? Sure, we know that it went up, right? And it had some good patterns to go along, but what was actually taking place and what made it move the way it moved? That's what's most important. Understanding why it did what it did. Because if you don't know why it did what it did, then, chances are if it happens again, you'll probably get burned. All right. So in this video, we're going to talk about the stock of GEVO, the stock that moved about 500% today. It gained about 500% today, at its high before then dumping out before the end of the day, which was very predictable. Myself, I made about $2,000 on it today. If I actually show you the P&L here, so I'll give you a quick little glimpse of, hold on one second. I'll give you a quick little glimpse of my profit on it today. So I'm right here. So this was my profit on GEVO today, which is this one right there. So I made about $2,300 on it today. I finished out my day just below $6,000 profit, including commission. So today for me was a good day. But regardless of the money made, what actually happened with the stock of GEVO today? That's what we want to talk about here. So if you didn't notice it pre-market GEVO. Oh, let me get my big head out of the way on the screen. So if you didn't notice, pre-market GEVO started at about $3.75, $3.50, and then it popped up to a high of $5.30. If you had looked at the news on Thinkorswim or just any kind of news channel like Market Watch, FinViz, something like that, you probably could have Googled it, to be honest. But if you didn't notice, they got news this morning, some positive news. Positive news is key for penny stocks to have significantly good days. Without news, the chances of them having, first off, a day this big is very unlikely. So in order for a stock to have a really, really good day, usually they need news. And for them to run this crazy, they really need to have some good news. But it wasn't just the news that helped catapult this to extreme highs today. It was what we call a short squeeze. It was literally a continuous short squeeze up until the point when short sellers knew that they were just getting hammered too much. Then it just became buying pressure. So if you're a beginner, this might be a little bit confusing to you. So I'm going to break it down as simply as I can. So in the marketplace, when you're trading stocks, you really have two types of players for the most part. I mean, you could get more technical, but there's really two types of players, right? You have either someone who wants a stock to go up, which is a bull. So you've heard this term before, bulls and bears. Yeah, I mean, technically speaking, that's really just it. You either have someone who's a bullish trader or someone who's being a bearish trader. A bullish trader wants it to go up and a bearish trader wants it to go down. Okay, so when you're trading a stock, you're either buying it to go up, which means you buy now, sell later. And then if you're short selling, which is the bearish trader, if you're shorting it, you are selling first, buying back later. That might have been confusing. Let me explain it differently. When you typically purchase a stock, you're buying it first in hopes it goes higher to then sell it for a profit. That's how it normally works, unless you lose and then you end up selling it for a loss. But theoretically speaking, we buy it in hopes it goes higher to sell it for profit. All right. But if you're a short seller, we're talking about the bearish trader now. We're talking about a trader who wants it to go down. A bearish trader is somebody who would then short the stock. What we call shorting a stock means they are hoping it goes down to make money. So when you short a stock, you actually sell shares first, and then to exit your position, you buy the shares back. So in other words, if I were trading GEVO and I wanted to go down and I shorted it, I would first sell shares in hopes that the stock drops, and then I buy the shares back at a lower price, and that's how I make my profit. It's the exact same thing as being a bullish trader or buying it and selling it higher. It's just flip-flop. When you buy a stock in hopes it goes higher, you buy now and then you sell it. A short seller just sells it first and buys it back later. And the difference between the price he sold at and the price he's now buying it at is how he makes his profit. It's the exact same thing as buying a stock and making profit. It's just really flip-flopped. All right. So now that we have that out of the way, why did GEVO go up so high? And I will tell you right now, it's what we call a short squeeze. Anytime you have short sellers shorting a stock, when they want to get out of their position, they need to cover their position or buy their shares back. And short sellers can cause a stock to go really, really high if they continuously try to short the stock and it's not going lower. And that's what we call a short squeeze, where the short sellers are having to get out of their position, which means they're buying it back, and they're really what caused it to go higher. So let me explain this a little bit differently. So earlier in the morning, or let me put it this way, this is a penny stock, started at $3, popped to about a high of $5 pre-market. People were making money. I can tell you right now, probably 6 to 7 out of 10 times, anytime you see a penny stock popping up in the morning and flying up, right? And let me point this out, that earlier in the morning here, pre-market, the stock GEVO was up about almost 50%. At its high pre-market, it was up about 50%. So let me step back. 6 to 7 out of 10 times when a penny stock pops up pre-market, it will most likely dump out of the gates and go red, okay? Why though? Why is because if you're experienced and you've been trading for a while, you'll know that most of the time, penny stocks will drop out of the gates if they've had a really big run pre-market. Why does that happen? Well, if the stock moved up 50%, anybody in the stock from the previous day who bought is up 50% now. They're probably going to sell out of the gates, right? If you bought GEVO yesterday at 350, you wake up in the morning and all of a sudden you're up 50% of your position. You'd almost be stupid not to at least sell some of your shares and lock in some money. You get where I'm going? So that's why a lot of times you'll see penny stocks dump out of the gates, because people have already made a bunch of money if they fly up. All right. So if 7 out of 10 times, 6 to 7 out of 10 times, a penny stock is going to dump out of the gates, what do you think you should do? You should probably short the penny stock out of the gates, because about 6 to 7 out of 10 times, they're going to dump out of the gates. And people who are experienced in short sellers know this. If they know that about 6 to 7 out of 10 times the penny stock's going to dump out of the gates, they're going to short that stock out of the gates. And remember how I said, if you're short selling, you're selling first and buying back later. So not only do you have people that are selling to lock in the profits from being long, but you also have selling pressure from short sellers who are now getting short on the stock out of the gate. So not only do you have people who are selling the stock, but you also have people who are short selling the stock to get in a new position. And that's why most oftentimes you're going to see that stock start to come down out of the gates, okay? But know this, if you're a short seller, the only way you make money is if the stock is going down. So if the stock starts to go up, you're going to start losing money. And if the stock starts to go up and you're a short seller, you'd want to get out of your position so you'd stop losing money. And remember how I said, if you're a short seller, the way that you get out of your position is by buying it back. Now that we have all this cleared up, let's go and walk this through. All right. So in the morning, you have the stock GEVO. It pops up. It goes up 50%. All the people from the previous day were like, hey, smiley face, I'm up 50% already. It's backwards, but I'm up 50% on my position already. So out of the gates, they go, screw it. I'm going to sell. I'm going to lock in that money. So they sell, right? And then not only do you have the people that were in the position or maybe in for, this could be people that were in for 2 weeks ago on GEVO, right? And they're selling, locking in the money, all right? Then you also have the short sellers, right? You have these short sellers in here that know that GEVO is probably going to dump out of the gate. So you have a bunch of people here at the open get short, which is also going to cause the stock to go down, right? Right out of the gates. That's what we're talking. So that's what's going to cause it to go down. All right, so fast forward a little bit, GEVO crashes, and then we'll think about this, right? You had a bunch of people shorting it, so you have a bunch of short sellers in here. What ends up happening is the stock starts to sideways consolidate. It just starts going sideways. You see that? If the stock is going sideways, those short sellers who piled in, they're no longer making money. It's just going side. It's just flatlining. They're not making money. And for one, they're not really losing money because it's just going sideways. Remember, short sellers need it to go down. So if it's not going down, they're not making money. But if it's not going up, they're not really losing money. So short sellers would have no reason to get out of their position until the stock really starts to go up. Okay, now that we have that cleared up, look at this right here. Alrighty, so you can see, like in the morning, we all get short. And then what happens? Sideways consolidation. And then I'll also mention something. Stocks typically don't just move sideways for too long. It just doesn't happen, right? It's not like you're going to stand. Let me ask you, how long are you going to stand in place still before you want to move around? Probably not too long, unless it was a bet and you're betting someone how long you could stand in place. You're not going to stand in place or sit in a chair every single day, all day long without moving, right? You're going to move at some point, and it's just like a stock. A stock is not just usually going to go sideways for forever. At some point, it's either going to go up or it's going to go down. So knowing that a bunch of people shorted the stock in the morning, once it just sideways consolidated, eventually it started popping up. Once it started popping up, that caused all the short sellers to start exiting their position. Remember, when a short seller exits their position, that means they're starting to buy it back. So it's what happened. All these short sellers started covering up all at the same time right here. You see all the volume come in? All the shorts started covering up because they got short initially. So let me put it this way. These red arrows indicate where they started getting short. These are all short sellers, and now they're all holding, right? And then this yellow arrow is going to resemble where they started getting out. They started exiting here, which caused a short squeeze. So not only did you have short sellers getting out and buying back the shares, causing it to go up, you also had momentum traders like myself or anybody in general go, oh, look at GEVO starting to go up. So now you have short sellers getting squeezed out, and now you also have new buyers coming in and pushing the stock higher. All right, so if I was shorting the stock too, if I was shorting the stock and I got in, let's say I got in short right at the beginning of the day, which is right here, where do you think I'd have my stop loss? I'd probably have my stop loss right where I entered or maybe a little bit below it. So you got to think, if everyone was getting short right here, that means they are probably going to have stop losses around there. So I'm going to use a red arrow to indicate where a lot of short sellers' stop losses would probably be. Right about there. Right about here, here, and all these key levels. Notice anything special? At each one of these red lines, that's really where the stock started to move, which is also where the stop losses would have been for a lot of short sellers. So as the stock moves higher and hits their stop losses, that thing's just going to keep going up because they're going to have to exit. And when short sellers exit, they're buying back their position. So that's what initially started the move today on GEVO, was a short squeeze from short sellers shorting the stock earlier in the day right here, okay? Now, if we go further, you can even look. So it just kind of took off, and then eventually what happened was it just further led into a momentum play. And then after the short sellers got squeezed out, really what happened is it just kind of started trending up, and then we had some nice bullish patterns with dip buy opportunities and entries over new high of days. So then that's really what pushed the stock next. So first it was a short squeeze. Then we had dip buyers coming in on these lows. We had a little bit of an ascending triangle pattern breakout happen. So then momentum traders came in. Then what happened was the stock went crazy up here, and guess what happened? Everybody shorted this candle. A bunch of short sellers shorted this candle again. They probably shorted this candle. They probably shorted right here. And then guess what happens? It started trickling all the way back up because buyers kept coming in. And what ended up happening is those short sellers got squeezed once again, which caused the stock to start running. All right. And then at this point, right, once we started going crazy, at this point, it was just a frenzy from there. Everyone was getting FOMO. At this point, when it started skyrocketing, it was just FOMO, fear of missing out, greed. Everyone's like, oh my God, this thing's going to keep going. So everyone just kept buying and buying without any real care in the world as to the fact that it was going to dump like crazy. So then as it gets up here, what happened? I can tell you exactly what happened. On this halt right here, it got halted right here. People shorted it, didn't go down. They got squeezed up again. then people probably tried shorting it right here, didn't go down, they keep getting squeezed up. So whenever you see these really massive runners, it's not just people buying it. It's usually you have short sellers trying to short it, but the buyers win the battle and they cause those short sellers to squeeze out. And then eventually, once it hit a high of 21, it just got so extended and everybody knew it was about time to come down. And then from there, the stock just crashed. All right. So for your newer traders, don't think that GEVO was just, it was a random play that everyone started buying up. No, it was a short squeeze that started the move, which then brought in momentum traders. Once the short squeeze happened, my scanners went off. Everybody, any professional trader scanners were going off, high a day momentum scanners, parabolic scanners, all of our scanners were getting hit with the same stock. GEVO, alert after alert after alert. GEVO, new high a day, new high a day, new high a day, new high a day. Fucking, 6,000 mentions on StockTwits, which got 20,000% volume increase over the past 1 minute. GEVO. So at this point, everybody knew GEVO was going through the roof. My scanner had 6,000 alerts that were sent through on StockTwits. So that means 6,000 people had mentioned, look at GEVO on StockTwits alone, right? So scanners were just blowing up on GEVO. So once the short squeeze took place, started the move, our scanners were all hit at the same time for the stock GEVO. And then at that point, you had traders like myself start watching it, momentum traders, and then we start looking for the setups, and then it was history from there, and the stock just blew up. Again, this is might as well watch GEVO tomorrow, because I can tell you that a lot of people are probably going to think to short the stock tomorrow. Remember this. A lot of people will probably look to short this stock tomorrow. So tomorrow, I can guarantee you at some point, there's going to be a long bias trade on this stock. At least. Hell, there might even be a long bias trade out of the gates. I don't know for sure, but what I do know for sure is this is a huge penny stock now. It's up really big. It's now on a lot of short sellers' watch lists. They're going to look to short this thing tomorrow. And if they get caught, they might get short squeezed and we'll have another massive push on the stock. It may not go all the way back to 21. It may not go higher. It may go higher. But what I can tell you is a lot of people are going to try and short this tomorrow. And it is probably going to squeeze at some point. Who knows where the squeeze is going to be? I'm not going to go that far in depth, but if you want, you can tune into the pre-market watch list video tomorrow morning when I do my pre-market watch list, which is at 8:30 in the morning Eastern Standard Time, in which I will cover GEVO in more depth tomorrow. So again, I guarantee this thing's going to be in play tomorrow. So if you're a short seller, good for you. If you're a long bias trader, good for you too. There's probably going to be trades both ways on this stock tomorrow. So thank you guys for tuning into this video. If you have any questions, feel free to comment below. You can always like, share, and subscribe if you see value in the video. You can always check out the first or any of the links in the video below. That's how you stay in tune with me or any of our private groups we have for our trading course, trading chat room, live stream, et cetera, et cetera, et cetera. And I will see you guys all tomorrow at 8:30 a.m. Eastern Standard Time if you're tuning into the pre-market watch list. If not, I will see you on the next video. Take care.